connecting Arizona. 12 News Today starts now.
Yes, we know that the government shutdown has affected federal employees and programs, but this morning we're looking at how it could affect your money. Chris Rapsky is live in the newsroom with a closer look. Chris?
President Obama.
From a financial standpoint, the length of a shutdown plays a key role, but it's the debt ceiling that could have the biggest impact on your money. With me this morning from Jackson Financial Advisors is Jared Roskelley. Thanks for coming in. First off, the markets rallied yesterday. The Dow was up like 62 points. So why exactly is there an increase in the market despite the first day of a government shutting down?
Well, I think the first and foremost is the markets are pretty smart, and so they've been pricing in for a week or 2 weeks that there might be a potential shutdown, and so consequently, it really wasn't news to the markets that there might be a shutdown.
Okay, and for investors, what's the biggest difference between a short-term shutdown, say a week long, and a long-term shutdown that may last a month or so?
Well, a short term is not going to have much of an impact because typically after the shutdown, all the furloughed employees are paid back pay, so there's really not a difference in cash flow and GDP and so forth from the government. So short term really has almost no impact on the markets. A long-term shutdown obviously would have a greater impact. You look at 800,000 employees that would be going without paychecks. That's a lot of cash that's out of the economy that's not being used to buy goods and services, and that would have a dramatic impact on the overall value of the stock market.
Right. History has shown the economy can slow down when there's a long shutdown from the government. On October 17th, Congress must raise the debt ceiling or they'll default on their bills. Is that date and that a much larger threat for the economy and for investors?
Absolutely. You know, the markets hate uncertainty, and until they know what the debt ceiling looks like and what Congress will be able to do with future government spending, that could have a more dramatic impact on the economy as well as the markets.
Okay, so what's your advice? I mean, for folks at home, they have investments, they have their 401ks, they have their portfolios. What's your advice to them to do right now?
Well, if you look back at the shutdown in 1995 to 1996, the whole shutdown lasted about 28 days. It was kind of split between two different periods of time, but overall, the markets rallied about 6% just over that 28 days period of time. So consequently, really holding tight is typically the best medicine for this.
Okay. Jared Roskelley, thanks so much for coming in. We appreciate your insight. You take a look at the big board. It's from yesterday. The Dow was up 62. S&P was up about 13.5 points. We appreciate it, and we'll be talking to you a little bit later as well.